I think most people greatly underestimate what they will be willing to do in a collapse. A really dark comment, but an absolute true comment. I think it's a terrible statement because it essentially says it's okay for us and a small group of people to have assets, but don't worry about it. Every single drop has been a buy the dip opportunity. That is going to end. I think that we're facing a drop, maybe above 6,000 on the S&P, but whenever this top is put in, I think it's going to be a top for many years. Hello, everybody. It's Mike Preston, New Harbor Financial Group. Thanks for tuning in. This week, we thought we would talk about a video we did a few months ago that was pretty popular. It's a video on David Webb's Great Taking. We still get questions on the Great Taking. We're very grateful for those of you that watch and subscribe to our channel and that provide your comments. And today, we're going to bring up some of those comments and we're going to respond to them. So we do read them all, so thank you for doing that. Looks like about 48% of the people that watched it are not subscribed. Please do subscribe to our channel. We really appreciate it. Down below, please subscribe, like the video, and submit your comments. Absolutely, we read them all, and I'm going to read some of them live on the air here today for everyone to see. So please do that. If you're feeling like an event like the Great Taking could happen and you're scared about it, you're scared about losing everything, please watch the entirety of this video. I think it might make you feel better. So if you haven't already, go watch our first video on the Great Taking. I analyze it, I provide my viewpoint. So go take a look at that. The link is down in the bio to that video. So let's take a look at first the Great Taking. I'll give you a quick recap of what I think about the Great Taking. Then we'll take a look at some comments from viewers. I think they're really interesting. But the Great Taking basically is a book that warns people that the government/banking system can take assets in an all-out financial collapse. My ultimate conclusion is I don't think it will happen, but I do have to admit that the UCC, or Uniform Commercial Code, seems to lay the groundwork, and it talks about things like beneficial owners and things like that, and it talks about a chain of command. And so it seems to be construed that if this loophole or if this code was used as a way to say that banks and intermediaries don't have to honor assets in an all-out collapse, it seems to provide the ramp for that. We even tried to get a legal opinion and couldn't get a definitive answer, really. My ultimate conclusion is I don't see it happening. I think we'd be in civil war immediately if it happened. And I think there's so many other things that can be done first that the Fed, the Treasury, our government would do first before we got there, including printing money. I'm not for printing money, but I think that's what's likely to happen. My ultimate advice to people was to pay down debt, put yourself less at risk in the system. The first Great Taking was back in the Great Depression. Essentially, assets were allowed to collapse and banks foreclosed on them. That's how it's done. If you don't have much debt, you're at much less risk. We don't know how things will shake out in the climax of this fourth turning that we're in, which is why we suggest owning gold and silver. But I don't think we're going to see a collapse and a complete takeover of all the assets across the board. It's so much easier to print the money to basically fix the problem. Not that it fixes the problem, it creates 10 more. But short term, it seems to fix the problem and come out with central bank digital currencies. And I'm completely against central bank digital currencies, but I think that's what will happen anyway. Much easier to do that, at least short to intermediate term, than to just say all your assets are gone. The bank owns them. I just don't see that happening. And furthermore, it's very hard to protect yourself if you do see that happening. There's not a lot you can do in today's system. It's very hard to transfer stock ownership to physical form. You really don't have much choice other than to put all of your capital into real assets like real estate or gold and silver. And that takes away a lot of flexibility for people. We think that the financial system will stay together through this fourth turning. We think that money will still have some value, even if it ends up being CBDC. And therefore, it makes sense not to go all in anything, gold, silver, or even real estate, particularly at these levels. So happy to talk with you one-on-one about any of this. So let's go to some of these comments. I don't know what's worse, losing everything or accepting a CBDC. Actually, I have lost everything once and recovered. But once we're on a CBDC, there may be no going back. Well, the good thing about losing everything, and kudos to you for doing that and coming back and keeping a positive attitude. The good thing about losing everything is it can't get worse. And a lot of times it's a really good experience. It's terrible to go through it, but a lot of times coming out of that, you're a much stronger person. So I commend you for coming out of that. Or accepting a CBDC. Well, it's not great to accept a CBDC, but you're not going to have the choice, in my opinion. I think it's going to be forced upon us. And I think that life will be okay but it will be less free. I think that probably losing everything is going to be a more traumatic experience than a CBDC, at least in the short term. Long term, a CBDC takes away freedom, and there's a whole host of other things to think about there. And you're right. I don't think that there is any going back once that happens. But I do think the public is going to beg for some kind of bailout, and they're going to beg probably for a CBDC, and they will accept it. And life will still be okay, but it will be less free. And I think our standard of living will go down over the next couple decades. It'll happen slowly. We didn't choose this. We didn't put us here. Our politicians and our bankers put us here. As an investor, I have had 4 companies go bankrupt on me. I lost every cent. All 4 of them exist today, and they're even more profitable than before. That is in a small way what I think it will look and feel like. Yeah, that stinks. It's true. As an owner of common stock, these companies can go bankrupt, reorganize, and come back stronger than ever, and you could still lose everything. I get your point that you think that this could happen across the whole board, happen to every stock, every asset. As I said before, I really don't see it. I think our government will do whatever it takes, including printing money and using CBDCs to kick the can a little further. The real question is, will they be successful? Ultimately, no. I think that asset prices collapse and our standard of living gets reduced for the long term, but I don't think that means that all the assets across the board are confiscated. The next question says, the mechanism set up in the UCC is there only if brokerage firms or clearinghouses go under. That mechanism would not be invoked on a mere but significant market fall. It would literally have to be a historic collapse of systems. I agree. In that event, pensions and individuals holding securities would be at the back of the creditor line. The UCC mechanisms are not in place by accident. If it is there as a solution to large creditors for a worst case scenario, it is their bunker. Well, I agree. It would only be invoked on a complete and total collapse. I think my argument is I don't really see it being invoked even then. It would literally have to be a historic collapse of systems. I think we could get close in the climax of this 4th turning. I still think CBDCs, money printing, other bailouts are what's likely to happen, not a complete confiscation of assets. I think he's just trying to warn people about what could happen. I think most people greatly underestimate what they will be willing to do in a collapse. A really dark comment, but an absolute true comment. I hope we don't ever get there. I hope we don't have an all-out collapse. I do think we're going to have the largest bear market of our lives in the next couple of years. If we have an all-out collapse, I think that it's true. Most people greatly underestimate what they would be willing to do. All I can say is let's hope we don't get there. And if we do get there, let's be kind to each other and try to help each other. What do you think Klaus Schwab meant when he said, you will own nothing and be happy? Klaus Schwab, the head of the World Economic Forum, 86 years old, basically meant he was talking about universal basic income and that not everyone can own assets. The system can't handle it. Well, a small portion of people can certainly own assets, and those tend to be the highest net worth people in the world. And it's not a fair statement nor a fair system, but his point is that you don't have to own assets to be happy. You can simply get a universal basic income from the government. I think it's a terrible statement because it essentially says it's okay for us and a small group of people to have assets, but don't worry about it. You'll have an income and you'll be happy. You don't need to have capital in the system. And I think that's wrong. I think it's a complete reduction in freedom. I think it's a very dangerous statement. I think most people agree. Normalcy bias is governing many people. Absolutely, right? Our whole lives, we've been pretty much in this system that's been bailed out. This bull market that we're in is 42 years old. It started in 1982. Every single hiccup since then has been bailed out. There's been really no consequence, not even October 19th, 1987. That came back within 10 months, I think. Tech crash came back within 2 years. The housing crash came back within a year or two. COVID came back within a month or two, the COVID crash. So every single drop has been a buy the dip opportunity. That is going to end. I think that we're facing a drop once this top is put in, and I think it's probably going to be higher, maybe above 6,000 on the S&P. I don't know. We're at 5,600 right now. But whenever this top is put in, I think it's going to be a top for many years, and it's going to be more of an L-shaped move. That's the danger of it all. So we have to avoid it, and we have to try to get positioned on the way down without taking on water. It's not an easy thing to do. I think most people are going to start buying the dip too soon and have no plan about it. We have a plan. We've got a plan for layering in with hedges to do it slowly, and then hopefully get more positioned over time in a market at levels that will actually provide positive returns. But to do that really means an unwinding of all of this heroic effort that we've been living through the last 25 years. That's not going to happen easy, and it's not going to happen without pain, and it's going to be a little bit ugly. But yeah, normalcy bias is what everyone's stuck in. Can't really blame them, but that will change. The next comment says, I feel like there's a real reason to worry. Good analysis, but it does not take into account the whole picture. This is just one piece of the puzzle. He is assuming that if there's some economic collapse, everything will come back as it once was. The good times will return, but maybe this time the plan is to not come back. My guess is that it will, but in a totally unrecognizable way. I believe that is what Webb is implying. I believe the system will come back. I believe it could take 50 years to come back. My concern is that a lot of people don't have 50 years. I do believe the financial system will continue. I do believe that some kind of currency system will continue, even though it's probably going to be a central bank digital currency. But I think that life will go on, that there'll still be a market, and that it is worth it to try to avoid the downturn in a big way so that whatever assets you have, you can deploy in a way that adds to your life. That's the key. And hopefully avoid a lot of emotional turmoil and stress on the way down. The next person says, take a look at the Cyprus bank disaster in 2013 for an idea of what this would look like. You said you can't imagine. You need very little imagination for this example. Yeah, in Cyprus, there was a bail-in, and I believe that they had government protection below $100,000 or the equivalent of $100,000. In that example, if you remember, the very large depositors fled first. So there was a leak. The big guys got out. The ones that didn't get out that were above 100K lost their money, and it wasn't fair. There's nothing fair about this financial system. It seems to have been always this way and probably always will be. But the Cyprus event was a relatively isolated event, and to say that something like that or bail-ins could happen across the board in the United States is a little bit of a stretch. I do think we could have an economic collapse that shakes our foundations that could cause a lot of banks to go out of business, but I still think the FDIC limits are sacred, even if our government has to print $50 trillion. It's not good for our currency long term, but I do think those limits will be sacred. And if you've got deposits under the 250K limit, I think that you don't have to worry about that. Next comment says, David Webb has a very powerful analysis. His understanding of legal concepts is unfortunately too weak to support his theory. He misses out on the role of trusts in property. Property rights do not equate to legal ownership. If you have a mortgage on your house, the bank is the legal owner, you are the beneficial owner. He massively oversimplifies with a misleading result. So this commenter, maybe it's an attorney, I don't know. We tried to get a legal opinion definitively, and it wasn't easy. Maybe this commenter is an attorney, and maybe this is a valid point. The fact that the role of trusts in property was ignored, maybe David Webb's thesis was completely wrong because of this. I don't know. I'm not an attorney. I'm just putting this out there as something that maybe the commenter is right on. Next person says, if we're in a Zimbabwe style hyperinflation, it will be really simple to pay off a mortgage. Well, that's if you've got a big pile of cash that you're sitting on that you don't need, maybe that's true. But the truth is most people don't have a big pile of cash. They have incomes. They need to use that income to pay for daily things like rent, food, medicine. And the problem is with hyperinflation, all of your available income will be consumed by daily needs, and you won't have any money to pay off a mortgage. So I'm sorry, for most people, I don't really agree with that comment. Last person says, never forget that people who call financial advisors are out for themselves. We have not used money in this country since 1971 when we first began using fiat currency. That currency loses value every single month, day, and year. So most financial advisors want you to spend money with them and invest your money with them, and it isn't money to begin with. Why would anyone save anything that loses value every year? The only thing that is money in the United States is gold and silver. If you want to invest in something, buy that. The dollar is a joke. I don't know what to say about all financial advisors are out for themselves. I suppose, honestly, almost everyone in this world is out for themselves. Everyone's trying to make a living, trying to do the right thing, trying to support their family. I think that most people are good, whether they're financial advisors or plumbers or electricians. I think that most people try to help others, and I'd encourage us all to help others more. We don't have a perfect set of conditions or perfect information. In fact, we've got very imperfect information. We're encouraged to compete for money, this thing that's fake, relatively speaking. And particularly in the United States, we have chosen to uphold this thing called the dollar and create a wealth effect, which has everyone kind of chasing this wealth effect and competing against each other. I don't think it's a great thing. I can tell you that we here at New Harbor as financial advisors try to give no BS financial advice. I can say that with my heart. Do we have a business to run? Absolutely. I know there's probably a lot of other financial advisors out there doing the same. And unfortunately, I think there's probably a lot of them out there that are not doing the same, that are not doing the right thing. But this commenter is absolutely right that since 1971, when we began using fiat currency, everything started to get distorted. And it's only been more exponential since then. And they say if you want to buy something of value, buy gold and silver. Completely agree. We suggest 10% of your assets should be in gold and silver. We're very concerned about you putting 100% in gold and silver because it's difficult to get in and out of. There's usually 5% round trip costs, and we can have a big bear market in gold and silver. It happened from 2011 for the next 7 or 8 years. So diversify into gold and silver property. Cash should still be okay if it's not in stocks, if it's in something very guaranteed. But we're happy to have a conversation with anybody. Whether or not you're our client, give you some tips on what can maybe make your life a little simpler and a little more peaceful. But thank you for your comments. I think it's very, very helpful. We appreciate every one of them. And so if you want to have a one-on-one conversation with us, please click the bio below. There's a link to our webpage. Reach out to us. We'll have a one-on-one conversation, particularly if you're concerned, and it will help you figure out if you're protected against an event like this. And hopefully you're a little less anxious now. Thanks for watching. We'll see you soon.